Hi, and welcome to Insurance Insiders. I'm Mike Barker, and with me I've got Michael Richards, who's president of the Westwood Insurance Group and who's an expert in insurance for the healthcare industry. Today's topic is we're taking some case studies where seemingly impossible situations have been turned around. If you're watching this on YouTube, click the link below and join the Insurance Insiders group, and you can see the full version of this interview. Otherwise, hit the like button and the subscribe to our channel if you want more of this content.
For me, it all started. It all started with an enormous nursing facility in New York. No deductibles, as much coverage as you could get. Really, almost overprotecting, if you will, and not participating in the risk of the operation at all. But let's say this facility was spending $750,000 in annual premium for a 1 million, 3 million policy and a $10,000 deductible on each and every. And they were thrilled. They were happy, right? But there was a consultant that they hired, Joe. God, I got to remember his last name. And he thought out of the box. And he looked at their losses and he looked at the picture and he thought, we could take $250,000 deductible and absorb our losses and maybe spend less than $750,000 a year in annual cost for insurance. So Joe thought about it differently and wound up on our doorstep with this idea. I happened to work for a company at the time that would entertain that, and we put together a $250,000 self-insured retention for this 500-bed operation or something like that, and knocked their premiums down to like $350,000. Okay, but that's only $400,000, and now they're responsible for $250,000 on each and every claim. So let's say they got experience average of 2 losses a year. You just committed them to potentially $500,000 of expense that year, right? And then there was our one of our clients today who was outside of the nursing home arena and in the emergency medicine arena. A very large prospect, very complicated insurance structure, essentially built as to not to be deconstructed. Meaning we're gonna build this thing so fortified that no one can take it apart, so no one can acquire the business from us, right? And I think one of the reasons that I got on it is because I was so new in the business, I didn't know any better. It was truly a reverse engineering. It was a deconstruct this very complicated insurance contract that had multiple layers of participation between the insurance carrier and the insured. It wasn't just a deductible and then the carrier steps in. There were multiple layers in the contract, requiring performance from the parties and deconstruct and thus obligations and responsibilities on different parties as well, right? So really deconstructing that, because it was so complicated, you couldn't get a good story from the client in terms of being able to share with another prospective carrier what they're trying to replace, what they're trying to do. So that deconstruction was a phenomenal laboratory experience for me.
What was wrong with it from their perspective? Why did they want to replace it?
In this industry, it's financial burden. So they felt that they had an excessive financial burden, and generally speaking, they didn't. Generally speaking, they didn't have a financial burden until we could find a product that satisfied what they were up to that cost them less. And so those two projects were a nice lesson in alternative structured deals and outside of the box thinking. And so today something can happen, which it did last week, is we get a startup, somebody that wants to enter the home healthcare marketplace, but they don't have 5 years worth of operating history. They don't even have 2 years worth of operating history. They don't have a year worth of operating history, right? And so what has to happen is you got to piece together the elements that the underwriter needs to get a complete story.
So without those carrier relationships, without knowing what the carriers are looking for, it would have been a terribly time consuming exercise, wouldn't it?
You know, it all comes down to carrier relationships, meaning the relationships with the people that are developing the product. The opportunities are there constantly.
Mm.
It's where do you find the solution? Where do you find the product that's going to satisfy that? And that really is significant. And being able to communicate clearly, succinctly to the underwriters, to the carriers, what the client is up to. And so again, going back to why would you work with Westwood? Because the marketplace perceives us to have an answer.
Mm. Yeah.
And we do. And we do more often than not.
Right.
We go find a solution. We go find the answer. And we're fortunate that the phone rings and often there's a problem. And often we're able to solve that problem.
Have you got an example of someone, you know, a facility that was right on their last legs? They've had a big claim against them. Nobody wants to take them on. No one wants to insure them. Where you've been able to find cover for them.
We like to help people set up alternative structure insurance solutions. And what's that mean? That's a fancy way of saying we like to help people take on more of the risk, participate in the risk. We think there's a return in that, right? That being said, you have to be a certain type of client to participate at different levels, right? So an operator of a single facility with 100 beds, we would not advocate you self-insuring because you just don't have the volume. It wouldn't be prudent, let's say, right? Go back 7 years ago, 10 years ago, an agent came to us and they had a single facility with 150 beds ish and no market. The marketplace wouldn't insure them. And so against what would be normally prudent advice, the solution there was to look at it as a rehabilitation issue and get insurance coverage so they could continue to operate, but they were going to have to participate in their loss picture. More importantly, they were going to have to turn their loss picture around. Yes, we have those examples, and they're wonderful stories. Rehabilitation, it's wonderful.
And for those particular clients, it would have been either that or
Doors
closed
closed.
down.
Doors closed.
Yeah.
Nobody wants to see that. The nursing homes doors closing, no, that's not good for the community. It's not good for the operator. It's not good for the municipality that facility serves. No one wants to see that, but it happens. It happens. Yeah.
Yeah. That's great.
So
Yeah.
we have seen that. Love those stories.
Well, thanks for your insights, Michael, and those stories. That was Really terrific. Um,
Great chatting with you, Mike.
yeah. And again, if you're watching this on YouTube or on one of the social media channels, click the link and join the Insurance Insiders group, and you can see the full interview, and you'll get a lot more. You'll get regular newsletters with information about changing things in the marketplace. You'll see the interviews with carriers, and you'll see the full interviews. You'll be able to look through the library of full interviews